This and the next 3 sessions all available publicly on our YouTube channel and promote them on the back end. And we are committed to, like I said, a series of 4. The next one is College Students Guide to Managing Money. That one will be on September 20th. We're going to do that one a little differently at 7 p.m. Eastern Time. So that'll be the second of 4 sessions. In October, we're going to feature economic mobility. And in November, we are going to feature another piece aimed at military families. But for today, we're very excited to kick this series off. And I'm going to introduce Ben Dietrich. Ben is the business control manager, or a business control manager for Bank of America, and a veteran of the U.S. Army. And Ben will be the first of our speakers today. As a reminder, we're going to have everyone stay on mute and ask questions in the chat as we go along. And we should have time at the end of the hour to have some questions answered. Sorry, there's one attendee I can't quite mute yet. Bear with us. But having said that, Ben, do you want to take it away and introduce yourself, and then get into your team? I know you all have different segments for us in the hour today.
Yeah, absolutely. I'm gonna try to figure out how to share my screen here.
Sure, it should be the bright green button at the bottom. Yeah.
Yeah, I'm just trying to.
There we go.
Are you seeing the PowerPoint now?
No, we've got the files screen, a drive with files in it.
Here we go. Now I think you should be seeing the PowerPoint, correct?
Yep, we're all set. Thanks, Ben.
Great. All right. Hey, thanks, everyone. This is what we're going to talk about today. Going to talk about budgeting, savings, paying off debt, and credit. A little bit about ourselves. We are the Better Money Habits team from the MSEG, and MSEG is our employee network for military support. I am Ben Dietrich. I am an Army officer. We also have Valerie Williams, who comes from a military family, and we have 2 former Marines on the call as well, Peter and Stu. So you're going to hear from all of us as we go through this. Just quick note about Bank of America. Bank of America is very involved in the communities that it serves. And again, we have a very active and very large veteran community within Bank of America. And so obviously Bank of America is interested in supporting the military community, which is why we do outreach like this. So we're excited to be here. We love this. This is one of my favorite parts of the job is doing this stuff. So thanks for having us. We have a website, Better Money Habits, that you can find a lot of these resources, and we're going to talk more about resources as we go through. One more thing before we get in, just a quick disclaimer. Yes, we all work for Bank of America, but our goal here is not to sell you Bank of America products. You know, we love Bank of America. We use Bank of America products ourselves. But again, we're not here to sell you guys a product. Everything that we talk about today can be done with any bank that you use, right? So just keep that in mind. We don't get any kind of kickback or anything like that. We, in fact, can't give you specific financial advice about, you know, what you should do with your specific investments. We can't do that, and we wouldn't do it on a call like this anyways. That being said, if you have questions, we're going to have our contact information at the end of this. If you would like to talk to a financial advisor, someone to look at your specific situation and help you out, we're happy to provide those resources to you. Again, no kickback comes to us or anything like that. We just want to help. So if you are interested, the last slide is going to be our contact information. Shoot one of us an email, and we will get you in touch with someone that can help with your personal situation. Right? All right, let's talk about budget. This is probably not the most exciting thing that you're going to talk about, right? Unless you're a nerd like me, budgeting doesn't excite you too much, right? But having a budget is incredibly, incredibly important. It's along with savings. If you don't have a budget, you're not likely to succeed financially. And that's because what does a budget do? It tells you where your money's going, right? If you don't know where your money's going, how can you succeed financially? So I know it's boring. I know it's not a whole bunch of fun, but we're going to talk about how to create a budget. First thing we do is the fun part, right? We get to talk about how much money we make. So that's the first step. You find your budgeting app, and we're going to talk about different apps that you can use a little bit later. And you're going to enter your income. If you're married, enter your spouse's income as well, from your primary job, from the military, and any side gigs that you may possibly have if you're driving for Uber or anything like that, if your unit allows that. So all the money that you have coming in, that's the first step. Next is the not so fun part. Next, we're going to talk about all the money that goes out. So where is this money going, right? There's two different kinds of expenses. We have a fixed expense and a variable expense. A fixed expense is you know that the money's going to be coming out every month, and you know how much it's going to be. So think a rent or a mortgage or a car payment. You know that each month that money is going to be due, and you know how much it is, right? Compare that to a variable expense. This is something that the amount changes each month, right? So yes, you know that you're going to need groceries every month. You know that you're likely going to need gas every month, right? But you don't know exactly how much that's going to be. You have a general idea, but each time you go to the grocery store, the total at the end is not exactly the same. So that's the difference between fixed and variable expenses, right? So how do we find all this stuff? One tool that you can use is your banking app, right? So you can go online to your credit card statement or your debit card statement, and you can see everything that was taken out of that account each month. That's a really good place to start. Couple caveats to that. Obviously, if you spend anything in cash, that's not going to show up. And also, that's only showing that one card. So if you have a credit card and a debit card or multiple credit cards, just make sure that you're looking at all of those, right? That's a really good place to start. One thing that I find very helpful is using what's called the envelope method, right? So instead of having everything that you spent money on, listed on your main budget, it's a lot easier if you say, hey, I got these 10 categories that I spend money in, right? And those 10 categories can be whatever works for you and your family. Think groceries, entertainment, clothing, transportation, monthly bills, just bucket your spending into certain categories and call those envelopes. And you can think about it. So at the beginning of the month, you're going to put cash in that envelope. And then each time you spend money out of that category, it's coming out of that envelope, right? So let's use transportation as an example. Say budget $300 a month for transportation. Every time you go to the gas station, you take out, however much, the 50 or 60 or $100 these days to fill up your gas tank, right? Or if you get an oil change, etc. So that's an easier way to group your budget. You guys can still see the PowerPoint, right?
Yeah, Ben, can you share, put the PowerPoint into presentation mode so you're sharing the full screen as opposed to I think we were seeing your notes before.
Yep.
You go to, I think it's slideshow and then start animation. Yeah, or start slideshow.
So you guys are seeing the notes, right?
Do display, when you go to display settings up there, and then do swap presenter and views. Yeah, do that first one. Yep. Now.
There we go.
There we go.
Great. Fantastic. Hey, thanks for helping me out, guys. I appreciate it. All right, a couple more things before I pass it off. So you have your budget done, right? great, you made it through a month. You think you're done. Unfortunately, it's not that easy, right? Because you're gonna forget things. This is it's not as easy as it seems, right? So what are things that people commonly forget to budget? Insurance is a big one, right? Because you don't pay for insurance every month. You typically pay for it every 6 months. So don't forget that. You can take your 6-month expected payment, divide it by 6, and put that into your monthly budget, right? Subscription services or other automatic payments, right? So your Netflix, if you're not swiping or tapping your card to pay for every month, it automatically comes out. Make sure that you account for those. Again, we talked about cash, anything that you pay cash for. Savings, right? We're going to talk about savings later, but savings is a big one. You know, and don't think that you know, oh, whatever money's left over, that's my savings. You know, humans don't work like that. It's not how humans work, right? You're going to spend that money. So budget for savings. Pay yourself first, right? Because otherwise, you know, you just won't do it. And make adjustments, right? It's an art, not a science. Find something that works for you and your family. Let's see. Any questions? This is just an example of a budget. Go to your bank app. I'm sure that they have a budgeting tool. Go to the Google store or the Apple store, and you can find 100 different budgeting apps. Most of them are free. So try it out. Find ones that work for you and your family, right? If there's no other questions, I'm going to pass it off to Valerie now to talk about savings.
All right. Good afternoon, everyone. So let's talk about saving, one of our favorite subjects, I hope. So the first thing we want to talk about, when you talk about saving, you got to have your why. You got to understand, why do you want to save? So there could be, you know, your goals. Like you want to save maybe for an emergency fund. You might be going on vacation. You might be, you know, wanting to get a new house or a new car, maybe retirement. And then also you might have some renovations from home. You know, during the pandemic, a lot of folks were building out their backyards and building out patios. So you could probably save for that as well. So some of the ways you can talk about on, you know, like, hey, where do I get this extra money when it comes to saving? So some of the things that you can think about when you're talking about ways to cut spending, of course, eating out. Eating out is a main thing. Everybody loves to eat out, but if you eat at home, you can save lots of money just by eating at home. Could you think about it? This is I'm going to speak for my husband. He loves to use the Uber, the Uber Eats and all those other delivery services. So if you start looking at the charges there, it's like $5 and $6 each time he uses that delivery service. So that's extra money there. And if you cook at home, you can kind of set the budget, go, you know, save money by picking out your list at home with making your groceries. So just packing your lunch, you know, doing your prep sessions on Sundays. So that's another way to save. Drinking coffee, going out to the Starbucks. That's another way you can find some ways to save some extra money there. But one of the things too also is when you're talking about savings, if you actually have to physically save money, it may take you a minute to do it. But one of the things you can do is if you have direct deposit, is just maybe set a goal and say, hey, every pay period, I want to save $100. You can actually have that automatically direct deposited to your account really before you even start spending your money. So that's another way to just automatically save. And then also when you're talking about savings, you have to pick the right tools, whether it's a savings account, if you have CDs, because they can have interest on CDs and the mutual funds, you can save through stocks and then also through IRAs. So once again, just to recap on how to save, you got to understand your why. What are your goals for saving? You got to understand where you're going to get the extra money. And then you got to understand the how. How do we want to save, whether it's an account, a CD, mutual funds, etc. So that's just some of the ways to save. And I'll move on to the next slide. Okay, so saving versus paying down debt. So you want to say, you know, how do you want to fully fund an emergency fund? You know, what are you going to be saving for? Like some people like to have, and Pete's going to be talking about this, the emergency savings fund. And just think about when you talk about savings for emergency funds, those are unexpected costs. So whether it's, you might have say for instance, you need a new air conditioning in your car. That's something that you're not going to just have $4,000 or $5,000 sitting around for an air conditioning. So you may have to, save some money have an emergency savings fund for that. Do you have high interest debt? So think about your credit cards, just pay those down if you can on that. Are you saving for retirement? Some of us may be retiring or may want to do an early retirement and do something else. So that's another way is, are you saving for retirement? And then also you want to also take all of your money into account, look at all your debts that you have and measure those out. So basically when you're trying to save, you want to pay down debt in order to have extra money to save with. And like I mentioned in the other slide, what are your goals? You could have kids that you're trying to put through college. Just what are your goals that you want to save for? So that's just some of the things when it comes to saving money. And I don't know, Ben, are we taking questions now or do you want to wait to hold the questions to the end?
Yeah, as questions come in,
Okay.
I don't know if someone's taking a look at the chat or anything like that.
Okay.
But if we have questions, feel free to jump in and we can answer those as we go.
Okay. All right. So that was saving versus paying down debt. Like I said, just you got to understand what you're saving for, paying down, having your high interest debt, making sure you're paying those down so you can have extra money to save, and then just understanding what your savings goals are. And so I think the next slide, we turn it over to Pete for building an emergency fund.
Yes, good afternoon. My name is Peter Morrill. Next slide, please. We're going to talk about building an emergency fund. Emergency funds are not a lot of fun, but the why is very straightforward. So things will happen. They will. From a layoff, broken bone to a broken air conditioner, these things will happen. It's not a question of if. So we have to be ready for those things. It may seem like a lot right now with all the other items that Valerie covered. But as you can see, 30% of Americans have no emergency savings. That's the population of California, Texas, and Florida combined. 99.6 million Americans have nothing. If any unexpected event comes up, zero. This is not a good place to be. But if you don't have one now, let's start today. We can fix that. So for starters, you want to have about 3 months worth of expenses. Those unexpected things come up, depending on the size of your family. If you're single, married, have extended family, you may want to adjust based on what you think you need. So aim for about 6 to 9 months as expenses as you go, as you get that 3 months prepared. Next slide, please. Okay, let's not stress. Let's think about it 1% at a time. What I mean by 1%, if your goal is $100, think about it $1 at a time. 1 bit at a time, nothing to stress over. So here are the 4 steps to get you started. Like I said, 1% at a time. Make it a priority. In your budget, make this a line item. Pay yourself. It's going to be worth it. You don't want to be caught with no money when an unexpected expense comes up. You don't want that to happen to you. So make it automatic. The money you don't see, you will not spend. Go slow. Go steady. Be consistent. Treat yourself well. Pay yourself. It's okay to pay yourself. You make the money. It's okay to give yourself a little bit. Slow, steady, and consistent. Small amounts, they really do add up. Next slide, please. So now let's talk about personal decisions and discipline. This is the triad I call it. This is the axis of evil when it comes to money. Coffee, snacks, and lunch. I'm not saying don't do it, but be careful when you go out. If you're going to buy a coffee, $3, $4, $5 or not. I'm not saying don't do it once in a while, but be cognizant of it. World's most expensive coffee is about $90 a cup. I think it's Kopi Luwak or Black Ivory. It's okay. It's not that great. So save your money. Buying lunch, it's okay to go out to lunch once in a while. Just know the cost. It is expensive. With the inflation rate that we have, lunch is getting very expensive. It's much healthier and cheaper for you to make your own lunch. May not be popular, but it's going to put money in your pocket. Vending machines, my curse. Snacks on the vending machine. They are expensive and they're getting more expensive. Bring something healthier. An apple, grapes, pineapple. Get them at the supermarket. So if you add all these 3 things up for your daily decision, that's $2,000 a year, over $2,000 plus, just with 3 decisions. Some other decisions may be look at your subscriptions. What do you have for subscriptions? Do you have 10 or 11 streaming subscriptions, video game subscriptions? Are you buying books instead of using the library? Are you paying for magazines and not going through your public library? The public library has a myriad of options for you to choose from. Most libraries are very high tech today. And the good news is you're already paying for it with your taxes, so you might as well use it. Next slide, please. Okay, practical application. When I started this journey of emergency fund, I had no idea where I was spending my money. I was a young lieutenant, money in my pocket, living in base housing, had all the money in the world. But that crashed down around me real fast when I left the military. Back in the day, dinosaurs roamed the earth. I got a little notebook, started writing everything down, kept it in my pocket. Had to be very disciplined about what I spent. Every single entry, every nickel, every dime, every penny. I wrote it down for a month and I was shocked how much I was spending out and about on coffee, on lunches, on snacks, on little incidentals. And it added up. So that smartened me up. You may be quite surprised where and how much you spend. So keep it as long as you need to keep it to get a full picture of what you're spending every single month. Next slide, please. Okay, great. You have your emergency fund. Now what? Every job needs the right tool. Emergency fund is no different. The right tools, or some of the right tools, savings account, checking account. You're not going to get a lot of interest, not today, but it will be available. Should be liquid. You shouldn't have to go jump through a lot of hoops to get cash when you need it. This is the whole point of this fund, to have it when you need it. You worked hard to get it. It has to be accessible and liquid with as little risk to your capital as possible. This is money you're going to need right away. Not a week from now, but today. So think about those two options. There are others, but let's think about those two options. So not a lot of interest. It's going to sit safely, securely, FDIC insured, and your money's not going anywhere. It'll be available when you need it. Next slide, please. Okay. Final thoughts, emergency fund. It is just that. It is break glass only. It's not for vacations. It's not for good times. It's not for sitting out on the patio or buying expensive wine. It's there for when you need your money quickly. If you start now and be a good steward and make wise choices, that fund will grow faster than you think it will. So remember those daily decisions we talked about? Think outside the box. Look at every expense you have. Think of the alternatives. Use that big creative brain of yours and find out alternatives to what you're spending your money on now. Remember, it's not what you make, it's what you keep. Any thoughts on emergency funds or questions? Very good. Ben, turn it back to you. Oh, turn it back to me. Okay, we're going to talk about debt here. And as you can see from the numbers, Americans like to spend debt personally, and we love to spend money nationally. Big numbers here. As you can see, if you look further down on the left-hand side, holiday spending in the United States alone for 2 months, $859 billion, Americans outspent the Department of Defense budget. In 2 months, we love to spend money. Yes, we do. And this is how we get into debt. So let's talk about how we get out of debt. First, best way not to get into debt is just not to get into it at all, by making good decisions, by being wise with your money and being good stewards. So how can you pay off those loans without eating ramen noodles every day? Let's talk about that. Let's use some of the same strategies. We talked about building that emergency fund. We're also going to look at some additional strategies to help you repay those loans. But let's refresh on our emergency fund and then go into other strategies. Next slide, please. Okay, daily discipline, wise choices. Whatever you save, add this to your emergency fund. Remember the small amounts? They do add up. Let's apply the same to your loans. Once you have your emergency fund fully funded, start adding this extra money to paying your loans. Let's talk about some additional strategies. Next slide, please. Okay, make additional payments. This might be a little difficult, but it is doable. I did it. I know a lot of people who've done it. You can do it too. May seem like a stretch if you're on a really tight budget, but paying down your loan early will save you large amounts of interest on the back end. Remember all that money you saved from your emergency fund? Now that you're not funding it, you can go right here to paying off that debt. There's rarely, if ever, a penalty for paying off your loan or paying more than the minimum. You can make initial payments at any time in the month, or you can make lump sum payments. Either can save you a bunch of money. For example, at the bottom, $10,000 loan at 4.5% interest, just $100 a month from all those good decisions you made building your emergency fund. You can be debt-free 5 years ahead of schedule if you're on a 10-year repayment plan. 5 years ahead of schedule. That's a lot of interest in your pocket, and that's a lot of money saved just by $100 a month. It adds up quickly. Next slide, please. Okay, but get a better rate. This is where I get the most questions. Refinancing your loan. Question I get is, well, why would lenders even think about giving me a better rate? Lenders look at default rates. They look at economic data the same as any other creditor or lender would do. If there's a chance they're not going to get their money back, give them a call. If they think they're not going to get it, they're going to work with you. They want their capital back. They want their principal back. They're going to work with you to get a better rate. I'm not saying guarantee it's going to work, but I think 15 to 20 minutes of your time to knock off a percentage point or even half a percentage point will serve you well. It's worked for me. It's worked for many others. It can work for you too. So call your lender, see what they can do for you. One call could save you thousands. Note of caution, refinancing could very well impact your credit score. So check with your lender first before you get any ideas about refinancing or get a better rate. Just a note of caution. We'll cover credit coming up later. Next slide, please. Automatic. We discussed building your emergency fund and making that automatic payment to yourself. You can do the same with your loans. You can even get a discount for doing so. If a lender knows you're paying automatically, the money's going to come right out. Chances are you'll be able to get a discount. I get a discount on some of my payments because I set it up automatically. The savings could add up dramatically. Just a word of caution there. If you are going to make automatic payments, make sure you have enough in your account. You don't want to add insult to injury by having an overdraft or a default on your account. That will not serve you well. Next slide, please. Found money. This is my favorite. Get a bonus or a raise, tax refund, some sort of inheritance or windfall, sell a house, get some proceeds. Congratulations. Now, this isn't the most glamorous way to pay off your debt, but found money is new money, money you never had before. So before it burns a hole in your pocket, think about that emergency fund. Think about paying off that high interest credit debt, any type of credit card debt or other debts that you have that's accruing interest. You have a new source of money. You might want to think about using that new source of revenue, that new source of income that you just got to pay off some of your debt. Next slide, please. Okay, some final thoughts. The amount, I don't know what you owe, I'm not going to ask. It may seem insurmountable, but you can overcome it. I certainly did. Develop a strategy that works for you. Stick to it. Be consistent in what you do. Exercise personal discipline. Just make it happen. Don't miss a payment. We'll cover that when we go over credit. Be a great steward of your money. Continuing education. Don't let this be the end. Let this just the beginning. Continue your financial education. It will serve you quite well. Any thoughts or questions on paying off loans? And Ben, I will turn it back to you then. Thank you.
Great. Yeah. Hey, one final thought here. If you need some motivation on why to pay off your loans, take it back to your budget, right? See how much money you're spending on a car payment or a credit card payment or any of that, and think, how great would it be if all of a sudden you had that $1,000 from not having a big credit card bill or not having 2 car payments? What could you spend that money on? To make your family better. What vacation could you plan if you didn't have any debt? So keep that in mind. Like Valerie talked about, remember the why. Remember why you're doing it. Stu, you ready to talk about credit?
Yeah, absolutely. Go to this first slide. So we're going to be talking about credit and credit cards. These are the 3 topics we're going to cover today. Talking about choosing credit cards, managing your credit cards and credit, and then also credit reports and credit scores, and how you can actually help yourself to rebuild if you're in that position as well. Can go jump to the next slide. So when we talk about credit cards, there's different kind of credit cards available, and this is something you want to be very cognizant of, because you can either use credit cards for your benefit, or they can be detrimental to what you're trying to accomplish as well. As we were just talking about things like budgeting and creating an emergency fund, the amount of interest you're going to be paying on credit cards can really add up and be hurting you while you're trying to climb that mountain, so to speak. So there's different kind of credit cards that you want to be aware of, and what they uniquely are going to do for you and how you can use them to your benefit. So the first one is just your standard credit cards, typical revolving credit cards that you would have, Visa, MasterCard, what have you. They're going to be charging you interest as well if you don't pay them off each month. The second kind is your premium credit cards. Those could be different kind of cards that have additional benefits, like your Amex, or cards that have like concierge type of benefits. And there's multiple cards out there that can have little perks that go with it. The next one is reward cards, and these are pretty unique because this again is something that if you use it right, it could actually be something that may help you. If you want to go on a vacation, you want to take a trip or those kind of things, your rewards credit cards can actually be working in your favor as you're accumulating, let's say, points that you could use toward airline tickets or hotel fees. The next kind of credit cards typically are going to have very high interest, and we'll talk about that in a moment. But your private label store cards, don't mean to I guess put my age out there, but thinking about like Sears, Montgomery Wards, maybe some of these older type of stores. But a lot of the private label stores have their own credit cards, and typically much higher interest than you would pay with let's say a Visa or MasterCard. Then you have different ones, affinity cards, many banks, including Bank of America, Chase, what have you. They form alliances with, let's say, colleges, sports teams, or what have you. So if your favorite team is like out here in Arizona, the Arizona Diamondbacks, I could actually get a card that's branded with the Arizona Diamondbacks, but will be ultimately backed by one of the banks. And sometimes with some of those, they'll even contribute fees, or they'll contribute some of the fees to the organizations as well, which is a benefit. And then the last one is what we call secured credit cards. Now, this is something I'll talk a little bit more about when we talk about credit, but secured credit cards is a fantastic way for people to get started in credit, or for them to start rebuilding their credit. And secured cards is exactly what the name implies. You're going to be putting some money into basically a savings account that can't be touched, and then you're going to get a credit card for that equal value. The bank has that security, hence the name secured credit cards. And that way, if something did go wrong with the credit card, or you weren't able to pay, the bank would resort to taking that secured deposit, if you will. But if you work that properly, then you can do what's called graduating into one of the top one there, the standard credit card. So generally speaking, you can use the secured card and use that for a while, show your payment history, and then you can graduate up to the standard credit cards. But they are very good, can be very useful in some cases. And next slide, please. And we'll talk about some of the different things that you should consider that we're just also mentioning, talking about annual fees. Some of the credit cards are going to actually have additional fees that you pay each year. So just to have a certain kind of credit card, you may pay, $50, $75 a year just to have that credit card. Other ones, they don't have any fees at all. And that's something that you want to be cognizant of when you're thinking about which credit card do I want. So do you really want to pay that extra amount of money for that credit card when possibly you could get the same benefits, or theoretically the same the card would work in the same exact manner without having the annual fees. So that's something you want to kind of look around at. The next one is the APR. And again, we talked about some of the cards like your traditional retail cards are going to generally have like a 20+ percentage rate annual APR. Whereas you can get also lower rates on some other cards. And we'll get into some breaking down how the APRs also can work on credit cards too. And then you want to take a look at any kind of additional penalties or fees that may be associated with that credit card to see if you would want it. And then the next one is security features, which we'll dive more into as well. So there can be some attractive features that you can have, such as being protected when you buy things with the credit card. And the last one again is that any kind of associated rewards or warranties that may be a part of that credit card. So by you just let's say buying making a purchase, washer and dryer or what have you, they can have warranties that'll also be extended just by virtue of the credit card itself. Next slide, please. Okay, so this is taking a little bit of a deeper dive into some of those different areas. So talking about annual fees, you want to make sure just again that you understand them, compare the benefits. And again, annual fees, that's something that you're probably you would be possibly paying generally like once a year type of fees that will be added to your credit card and just for the benefit of having the credit card. The next one is that APR, and this is a little bit more tricky to where you also want to watch exactly what is happening, the type of charges you would be making with a card. So a lot of times credit cards can be broken down into different areas. So if you're taking a cash advance, that one may have actually a much higher interest rate. If you're buying different things, groceries, what have you, then those ones will be in a separate category. So generally speaking, each of the things that you could buy or services you buy could fall into a different APR, and you're going to want to watch that because maybe you're going to, if you carry a balance over month to month, it's possible that you could just be aware of where those extra APR might affect you, because usually when you make a payment, it's going to be applied to the highest interest first, and that's just the general rule of thumb in the credit card industry. But you want to be sure of how much that how much is in that bucket, so to speak, and then you can pay that off possibly faster. Again, if you're carrying any kind of interest month to month. And then the next one is actually just talking about those additional fees. So you basically want to know if there are costs for any types of transactions and what would be happen if you pay later or miss the payment, so that you're not paying those type of fees. So credit cards, again, if you don't miss a payment, there's probably going to be late fees associated with it. All those will be disclosed to you when you open up a credit card. They have to make those kind of terms very clear for you. So you will be aware of those, but just make sure you read that thoroughly when you open the opening disclosures of accounts, or when you're reading the brochure for considering cards. You can look at that, and they should have to disclose that in very simple, clear terms. If you miss a payment, you pay $25 and so forth. The next one is security features, and this one of the big ones, and I know this is very popular, at Bank of America, and I know a lot of other banks also have that, but one of the things is that you have fraud protection. So if there's charges that come in on, let's say, that through that credit card, then basically it could be taken off to the side. You're not going to be charged any kind of interest while it's being investigated. And in a lot of cases, what could happen then is the company itself will not charge you or hold you responsible for any of those charges. So the fraud protection for you just means if somebody else is using your card, then hopefully you won't be responsible at all, for that, as long as it's verified fraud. And you're cooperating, I guess, to help that get resolved as well would be the main thing. So make sure you read your agreement again, just to know that what can be put in those kind of categories or other security features. And then the last one, talking about rewards and discounts and rebates. Again, talking about just if you want to look at the cards and look at all those different factors. Some cards, like let's say a Costco Visa, they're through Costco, one of those type of companies. If you make a purchase, it may have additional warranties that will cover you in case anything happens to the product. So again, and the rewards, you want to make sure you're very cognizant of that, because if you are using it, let's say for the vacation scenario that I described, then that's actually something that you want to you're going to be very intentional about. But again, just make sure you understand what the card is doing, what those rewards can entitle you to. You may want to think about, okay, well, this credit card is going to offer me, I can use all the different airlines. This other card may only limit me to using a couple of airlines, those type of things, if that factors into your decision, or what you can use those reward points on. Next slide, please. And then we're gonna start talking about credit reports and credit scores. And this is kind of right into my forte of what I do at the bank. So one of the things that you want to talk about is your credit report. How do you get it? Again, it's listed there, a link for you. You're entitled to get one of your free credit report from each of the three credit reporting agencies. So one of the things that we could talk about, just like at the end, I'll summarize very quickly, is just how you can use that as well, just to rebuilding your credit. But that doesn't mean you get one credit report. That means you can get one credit report from each of the three companies. And the thing about it is each of them may slightly be different in each geographical area. So you may find some little quirks that are different in each of them, but they are trying to get that more standardized to where all the credit reports should be fairly similar. But just so you're aware, sometimes like your TransUnion may not show 100% of what your Experian does, could just be a little bit different. And then jumping down to credit scores, talking about FICO, we all know this is kind of like the premium, if you will, of how a lot of people gauge credit. So that's the starting point, and that's the Fair Isaac Corporation score. So that score basically can go up to the highest being 850, and each of the three credit bureaus will show that. And we'll talk about it in just a little bit too, but you can actually get those what we call soft scores. Different banks now are just providing that out there for you to see monthly basis. So it could be slightly different when you're actually applying for credit, but it gives you a good base of where you're standing. And then basically, these are just some interesting facts on the bottom. 1/3 of Americans have never even checked their credit report. And that's according to a study by TransUnion. So the more aware you are of your credit, the better decisions you're going to make about your spending as well. Some of the things to keep in mind is that credit scores now are not only used for credit, i.e. buying a car, a house, any other kind of purchase, but they are actually being pulled now for things like employment, and some other non-traditional things that you wouldn't think about somebody is going to be checking your credit score. So very important that 1/3 of Americans that have never checked their credit report, they wouldn't even know if any kind of fraud is happening. And that's another reason why you want to actually consider that you need to review your credit report, on a periodic basis, just to make sure everything on there is accurate, because when they do report that score, of course, you don't want things like fraud activity or things like that happening on there. So as you can see on the bottom, it gives you a little view of where the credit ranges can be. So you want to obviously try to get up there towards that 850, because when you do make purchases on a home or a car, the better your credit score, the more people are going to be competing for you, and therefore the lower interest you're going to be charged, which is going to help save you money the better your score is. Next slide, please. So let's talk about your just the score itself and what goes into it. And I'll keep this pretty brief, but the main things you want to keep in mind is the biggest thing is how you pay. So that's 35% of your score. The other thing is 30% of it is based on the amount you're using of your credit. So we call that utilization. So 65% of your score is how you pay. Are you paying on time? And 30% would be your utilization, like how much of your credit have you used? And being a little bit more on kind of a risky valuation part with the bank and credit, I can tell you that it's very good for you to keep, if you're going to use credit cards, then to keep it with lower than 50% of your total utilization. Once you start going past that, then all of a sudden some flags start running up. So when I see somebody that, let's say, has used 90% of their credit, every time they're making a payment at that point, it could come across as being very risky, especially if they're making large payments and then charging a lot at the same time. So make sure you're aware of that, what you're doing, and try to keep the utilization down as much as possible if you're using credit. The last thing there is your length of credit history. We very much would look at that when we're granting credit. Does it make sense? This person's 50 years old, and it says they only have 10 years of credit history. They're only on the books for 10 years. Does that make sense? It might, but it could be another flag. But again, it's another thing that's weighed 15% of your total score. So I'd question why, like if maybe somebody that had just moved here to the United States and just starting credit, that would make sense at that age. But somebody that let's say is born here should be starting credit theoretically around 18. So those are the kind of things that we would be taking a look at. And then the final 10%, if you look at is the types of credits, like as a revolving cards, loans, mortgages, and so forth. And then 10% is inquiries. So that's something, again, that can affect you. So when you are applying for credit, those inquiries are actually going to be starting to work against you just a little bit. So keep that in mind, that when you apply for credit, you're not necessarily going to want to have like 20 different places pulling your credit bureau. And then lastly, on the right side, as you can see here, what do these numbers mean? As you can see, there's the buckets that you would kind of fall in. So generally, if you're over 700 being the average score. So if you're 700 or above, it would be considered pretty good. And then over 800, exceptional. And then anything less than that, you may have had some problems, some delinquency, and then you want to rebuild. But to improve your credit score, just make sure you pay your bills on time. Again, 35% of your score is based on that. Keep your debt manageable. That's the other 30%, your utilization. 3 is don't close old accounts, because part of that utilization, they look at the total amount. So if you have 3 credit cards and it's a total of 30,000 open to buy, if you close one of them, you're kind of cutting that your total open to buy and making that percentage go up again of your utilization. So you want to keep an eye on them with old accounts, but don't necessarily run out to close them, because that could hurt your score a little bit. And then have a good mix of the different kind of credit as well. And then be strategic about applying for new credit. Again, you can use the credit cards to your advantage, because I would tell you, even being with a bank, I would tell you that one of the biggest fallacies out there is that people will tell you that if you pay off your credit card every month, that nobody likes it because the banks aren't going to earn money and they're not getting your interest. Well, that's actually not quite the case. And they also say that it's not reported then on your credit for you building good credit. And that's actually not the case either. We have to report your credit exactly the way you pay. So that's one of the things that's if you pay it off each month, which I would advise if you're using it, you are still going to be reported as paying in full for that month. So that's some of the things to keep in mind. There's no advantage to you paying, interest and carrying interest like month over month. So that's how I would do it. And I would advise if you're going to get a credit card and you're using it, be very strategic, like talking about the rewards. Like I have a card that's very similar to like that I use. But I pay it off every single month, but I run a lot of different things through that card for the simple fact of like running my points up so that I can use them for a vacation and make that cheaper. But some purchases that I would normally be making either way, I'll use the credit card and then know that I'm paying it off that same month. And that way you're increasing your points. So think about it in that terms. And again, you don't want to get into the whole kind of mountain of having to pay interest each month. So as don't use credit and think of it that way, because a credit card, even though it seems simple enough, is actually your IOU that you're going to pay that. So a lot of people think it's just a plastic card getting a transaction, but you are actually making an IOU with that. The same as you are writing a check or anything else. So think about in that terms, and then also use your credit bureaus. We were talking about those 3 credit bureaus that you're entitled to each year. If you're rebuilding credit, one of the things that you can do is pull 1 credit bureau each quarter. So the first quarter you pull your TransUnion, see your starting point. The next quarter, pull your Experian and see if you're making progress. So if you are actually trying to improve your credit, pull that first bureau, make sure everything on there is accurate. And then if there's anything you need to dispute, then send in those disputes to the credit bureau. The next thing would be the next quarter, pull your next bureau and see if you're making progress and those things were removed if they had to be. But yeah, be very cognizant. You could use that and then basically beginning a credit bureau then every quarter just to monitor your status. So with that finished and pass it back to Ben for final questions.
Thank you. As you guys can see on the screen, we got our email addresses here. Jot these down. If you have any questions, we'd be happy to help you. If it's a question about a budget or something like that, we should be able to help. But if you need some help with your own personal situation, you want to talk to somebody about investments or anything like that, reach out to us and we will get you in touch with somebody that can help you. All right, we're happy to do that. We got just absolutely fantastic resources here at Bank of America that truly enjoy helping people, especially veterans, right? So feel free to reach out if you have any questions and we can get you squared away. I know we have not a whole bunch of time left. If there's questions, please, I don't know if any questions have come in.
Yeah, Ben, there haven't been any in the chat, but I wanted to say thank you yourself, Peter, Stuart, Valerie. Tremendous presentation, very informative. One thing I was thinking, and any of the 4 of you could answer this, we hear a lot at the Cohen clinics around the country. We're just coming out of summer's like PCS season, a lot of moves for military families. A lot of them are younger military families. So I was thinking through your presentations, would there be any specific tips to maybe a young family in that position? Hey, we've moved a lot, or we just moved this summer, new state, new location. How do we get set up with everything? So I'm curious if any one of you would have advice as maybe one question before we close up here.
Moving's expensive, right? And I know that the military covers those moves, but a lot of times, depending on how you do it, that money's coming out of your pocket, and then it can be 2 months down the road that you eventually get reimbursed, right? So that can be tough. That can be really tough. Plan ahead. We talked about, how to save for an emergency fund. You can use those same tactics to you generally know that you're going to be PCSing within the next, couple months. So you can kind of get ahead of it a little bit and save up for that. And then just make sure that you're using all the resources on post, guys. The transportation office, the finance office, so you can get all your paperwork right. It's been years since I've done it, thankfully, but it can be a headache, right? Making sure that all that paperwork's right so you can get properly reimbursed, and it can take time. So use those resources. I talked about the great veterans network here at Bank of America. But guys, just the veterans network in general is fantastic. Since I've been out, I love talking to veterans. They're so helpful and they're so eager to help other veterans too. I know we got people all over. Here in North Carolina, we have a group called Veterans Bridge Home that has a ton of resources that can help you out with things like PCSing and finding jobs and creating a budget and all of that. So you just get online and search for veteran support groups around you at your current location, the location that you're going. I guarantee you that a lot of them have great organizations like Veterans Bridge Home here in North Carolina that you can take advantage of. So use that. Anyone have anything else to add to that?
No.
And I know that today was very broad. We didn't talk specifically about a lot of military stuff, but the upcoming sessions that we have, we're gonna dive a little bit deeper. Especially, I know the last one is focused specifically on military families. But we're here if you have questions. We're a lot of us here are veterans, so. If you have a military specific question now, we might be able to answer it.
All right, we are right up against 4 o'clock Eastern, but I think that's a great way to wrap it up, Ben. I really appreciate that, and we definitely look forward to the next one, September 20th at 7 p.m. Eastern, with Bank of America and all of you again. We appreciate it and look forward to the next time. All right,
Thank you. Thanks for the opportunity.
Thank you.
Bye.
Thanks so
All right.
much.
Take care, all.